Hey guys, welcome back to another NAT weekly update. So again, as we can see, I know I'm recording this on Thursday and not Friday, but pretty much I'm not expecting anything major to happen on Friday. We can see, however, that the NAT price since Monday of this week has literally not changed. It's pretty much flatlined. So it's was at $3.64 on Monday, and now it's $3.65. Um, and I just wanted to show you this graph here. And this graph shows you the retail investment. So pretty much on Robinhood, there's this site called Robinhood Track where you can actually see exactly how many retail investors or users on Robinhood held shares of NAT. And of course, it spiked from 6,000 number of users holding NAT to close to 50,000 just when there was a lot of floating storage and there was a lot of hype on tanker markets, right? And then since then, you can see from like close to 50,000, a steady decrease. And up until August 13th or whatever, since they have the latest data, the number of users holding decreased by around close to 16, 17,000 to 32,000. So we can see that the retail investment interest in NAT is steadily decreasing. And this also, might be this number may be a lot lower. But just because some people are afraid to take out money when they invested in here because they would be selling at a major loss, right? So that's just although retail investors are still heavily invested in NAT as compared to like pre-pandemic, right? It's like 6,000 versus like still like 32,000. Is still very depressed, right? We can see that there is sort of a sell-off in retail investors with NAT. Okay. And I mean, the tanker rates have been down this week as well. I mean, you can see here, like this curve shows the past 10-day trend, and we can see it's trending downwards. The spot earnings, TC earnings for Suezmax was $300, which is just absolutely ridiculous. Remember, a company needs $8,000 per day to operate a Suezmax vessel, and October 15th, which is today, not looking much better, $500, right? So of course I'm still holding my shares. There's one more article that I thought you guys might find interesting. So the title being "Tanker Market Could Face Sharp Rebalancing in Next Couple of Years." Fuel for thought. Okay, so we're just going to read some, and I'm just going to give you the key insights and what they mean of this article. So, the global tanker market is set for some critical capacity management in 2021 to 22. Weaker freight rates have sapped enthusiasm for new orders. Again, we know that there's not new orders in the order book for new fleets or new vessels, and creaking oversupply of older ships could accelerate scrapping, right? And so with uncertainty over pandemic-related oil demand, especially now coming into the second wave, and with a key focus on climate change goals, a step backward may be the way forward for tankers. Okay, so the boom in tanker deliveries in 2019 is set to be followed by a lull, right? So as I said in previous video, tanker market operates in a very cyclical basis that's like average, I think, around like 5 to 7 years, right? So new orders have fallen to decade lows, with the third quarter of 2020 seeing a substantial decline. So a total of 84 vessel orders have been placed so far this year, compared with 163 orders last year, right? So a decrease of basically half in the order book, right? And we know on NAT's investor relations page, they actually are buying two new ships or contracting out to build two new Suezmax vessels, right? So while the order book has not been lower in decades, NAT is actually trusting in the uncertainty and believes that the freight rates will actually increase, right? So this will be good, I think, for NAT in some part because, of course, a lot of companies are scrapping away older vessels that are not very efficient and not really replacing them with new ones, right? But NAT is actually getting more vessels. So hopefully by the time that they get their vessels in 2 years' time, the freight rates will have rebounded since then. So overall, only 364 vessels are currently on order, which represents just 7.5% of the overall deadweight tonnage capacity and compares to a steady 500 vessels or nearly 12% dead weight tonnage capacity before the slowdown in new contracts in 2019, right? And also, of course, we know that there are low rates. I just showed you the rates are so dismal, like $300, $500 in the past 2 days. So ship buyers have been reluctant to snap out vessels given the low tanker rates, with freight rates collapsing since May, right? And as we can see here, freight rates for VLCC, which similar to Suezmax, except VLCC can carry double the amount of oil on their ships, are looking a lot lower since like September here. If we compare 2019 to 2020, 2020 rates are severely depressed, right? And they just seem like they're just going to be low for some time, right? And of course, as I've said, there are concerns about the recovery in demand for crude, with transportation fuels in particular suffering at the hands of the pandemic, right? And this could keep freight rates suppressed for some time to come, especially since a lot of oil companies are already offloading their floating storage. So production cuts, weak U.S. output, and subdued end-user demand in Europe have caused a reduction in cargo activity. Of course, that makes sense. And again, another thing that they raise here is environmental concerns. So buying ships also comes with added risks this decade, given the life cycle of ships could be 20 years or more in an environment where there's growing pressure to decarbonize, impacting engine design and fuel choice, right? Just look at the booming EV sector right now. Everyone's, California just put in a plan to ban internal combustion engines by like 2035, right? And so they just, go on to talk about how, of course, with more environmental concerns, they're going to have to scrap these ships at a younger age because they're inefficient. And however, of course, a lot of the portion of the ships that are already on the market, more than 60% of the tankers are over 10 years old, which means they're nearing scrapping age, right? Which will be good because as you take out more ships from the market, this will push up freight rates because there's less supply of tanker ships, and so oil companies will have to fight for the remaining tankers that are in the market, right? So the lack of new orders, the floating storage bonanza, and low scrapping rates have all meant ship owners have been squeezing maximum value from their tankers, even those in the twilight years of their life cycle. Okay, and of course, this is a time where tankers and especially tanker industries need to look for new opportunities under pretty much hugely changed economic conditions, right? And so beyond pretty much there are incentives to send older ships to the demolition yards, and this will return again, like you're saying, decreasing the amount of tankers that are out there on the market, right? And so they're just talking about this here, about what the expected tankers going to the demolition stage are going to be in the future. And Euronav CEO, and Euronav is pretty much like the darling of tanker markets. So they're, pretty much one of the most respected positions in the tanker market industry. So the CEO says that the tanker market can adapt to the challenges of oversupply and weaker demand in both in the near term and further out. Okay, and how? So pretty much every year you have, roughly speaking, 5% of the ships that are too old, so they go to the recycling yard or scrap yard. As long as you don't renew that, your industry can reduce the size of supply by 5% every year, and we don't believe that the oil demand will be reduced by 5% every year. So although the ships are being reduced by 5% every year, oil demand will not be reduced by 5% every year. And I read a stat that oil demand is supposed to come back at full force in 2021, 2022, right? So he also pointed out to the strategy of buying secondhand ships to grow its fleet, given the uncertainty in the pandemic and with energy transition. This could be the way forward for many in such a volatile period and helping the market rebalance, right? So although oil demand will recover, and I do think that NAT stock price will recover to some extent, they still will keep on paying out their dividends. And I do believe in the near future, when I'm talking about like maybe anywhere from 2 to 5 years out, it is a time to get out of the tanker market. But for the time being, I do think that you need an iron gut to ride out this wave. As we can see here, the 6-month chart, where it was like above $70. You need an iron gut to ride this out and to ride tremendous losses. But I do think they will recover And especially I believe at least you should be holding at least for the dividends, right? So of course I do like this report. I'll link it in the description. Um, but yeah, let me know what your thoughts are. I hope you enjoy this NAT weekly update. If you did, please like, and if you haven't subscribed already, please do so. And I'll see you next time, guys.